with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. The International Monetary Fund has recently upgraded its economic growth outlook for China while lowering its forecast for the United States. In its latest assessment, the Chinese economy will expand by 5% this year, up from the previous projection of 4.6%. The IMF says Asia's emerging market economies, including China, remain the main engines of global economic growth. It also expects the world economy to grow 3.2% this year. So what is the current state of the world economy and what are the challenges lying ahead? For more on this, join us on the line now are Chen Jiahe, Chief Investment Officer at Novum Archi Technologies, Yan Liang, Professor of Economics, Willamette University, and also Wang Dan, Chief Economist of Hang Seng Bank, China. So Jiahe, I will start with you. The IMF projects the China's economy will grow faster than expected, expanding 5% this year. So what are the main drivers, do you think, for China's economy?
Well, we can look at this issue from two aspects. If you look at the macro aspect, currently the per capita GDP of China is only about 13,000 USD. And if you look at Japan, it's about 40,000. South Korea is over 30,000 USD per capita. So that means the growth potential of China is still large. Consider the fact that these countries are really similar with their focus on education, with the culture, this kind of thing. So this is a macro picture that China still got a large room to increase. And if we look at more detailed sectors, that China has been doing pretty right with many detailed economic sectors of its own. For example, it has been putting a lot of effort on utilizing more technology. It encouraged a lot of investment onto technology, AI, all these kind of things. So it's a huge focus has been put on the technology growth. China has also put a lot of focus on the growing of its consumption economy, which is vital for its growth in the next 1 or 2 decades. So it's a lot of right actions that Chinese government has been doing and China's economy has doing. So these are the main explanations for China's economic growth in the past few years, and we believe it will keep on growing for the next decade.
So Yan, so how do you think will the digitalization, the high quality innovation and urbanization help to boost China's economy?
So I think these are precisely the three important driving forces for Chinese economy going forward. So when we look at the first half of this year, I think industrial output growth as well as high-tech manufacturing and investment are the driving force. So that goes with innovations. This is where China is going to transform its economy into more innovation-driven, quality and productivity-led kind of growth to overcome the so-called middle income trap. And when it comes to innovations and technologies, it also very much manifested in the sustainable growth path when it comes to green tech and green technologies. And I think urbanization is also very important. China has now achieved about 66% of urbanization rate. So I think there's still room for urbanization to proceed. And what that means is that it's going to not only drive when it comes to investment growth, and that is very important not only for consumption, because this is part of the consumer demand, I think, potential. But on the other hand, I think it's important to talk about, modernization. The Chinese way is to achieve the kinds of common prosperity. So I think, these are really important driving forces going forward. And I agree with Jiahe. I think technologies are really important, especially when you think about, China's manufacturing sector. Right now, the high-tech manufacturing sector grew by 8.7% in the first half. And I think this is where a lot of productivity growth is going to coming from. But of course, I think we need to think about how to create jobs. And so we need to also upgrade our service sector to boost productivity growth in that sector, as well as generate more jobs.
So Jiahe, so how do you see the trend of China's trade with the Belt and Road countries? What are the driving forces for the momentum?
Well, China's trade with the Belt and Road countries is one of the very important reasons why China's international trade has kept on growing in the past 5 years. The trade with the Belt and Road countries actually picked this up. And if you look at the overall picture, China still got a very good growth with this international trade. And that's a very important force coming from the Belt and Road countries. There are two major driving forces for this rising momentum. The first is that China is able to utilize its own comparative advantage when we are trading with the Belt and Road countries. We have things that they are really needing. For example, a very strong, a super strong ability of building infrastructures, which is very important for many Belt and Road countries whose per capita GDP are around thousands or just over 10,000 USD per capita, which means they need a lot of infrastructure with very good quality, relatively low price, and very high efficiency to build them. And we just have these kind of things. And second is that the Belt and Road countries, many of them are still developing countries, which means they have a market that are rising much faster than matured economies because they are developing economies. So they have much more forces develop. So these are the two main driving forces for this rising momentum.
So what do you think about China's trade with the Belt and Road countries? And also Chinese companies are looking overseas for growth. So where do they go when they are seeking to go global?
Chinese companies have their eye globally, but when they first go out, they will usually eye for the neighbors. Vietnam has been one of the most popular destinations because it follows pragmatism. It's very close to Chinese history and culture. There's a widespread foundation actually for Chinese investment already in machinery, fabric, furniture manufacturing. So the integration between Vietnam and China is very good. But in the past 2 years, some of the other countries also emerged very strongly, mostly related to the auto industry. Countries like Thailand, Malaysia, India, even Indonesia or even India, they have become major destinations, some with more restrictions on Chinese investment or exports, but not enough to really deter the enthusiasm from Chinese companies. It's quite a high expectation that in the next 10 years, probably China will create an overseas economy that can be equivalent to the domestic economy. And many companies have made it a priority to be their strategy to actually test overseas market.
So Yan, so what do you think about Chinese companies, looking overseas for growth?
Right. So we have seen increasing in terms of companies' desires to go abroad. And part of reasons is because I think, there's growth potentials outside of China. And China has large manufacturing capacity and also technologies that are materializing and standardized. So a lot of these could be, in a way, invested abroad to find the next sort of growth momentum along with the domestic opportunities. When you look at China's outward FDI in 2023, it reached $148 billion. And that includes a lot of merger and acquisitions outside of China, but also greenfield investments. And when we look at in terms of the distribution, between 2005 and 2023, the largest recipient of China's overseas investment is actually the United States. And again, because this is a mature economy, has a lot more opportunities for China's companies to acquire existing established, companies and so on and so forth. Australia is the second, and then UK, Brazil, Indonesia, Pakistan, Switzerland, Russia, Singapore, and Canada are the following countries. But I think, as Dan and I think Jiahe mentioned, I think things will start to change. I think Global South now become a really important potential markets for Chinese businesses to invest in, not only because of geopolitical reasons, but also because these countries have really natural positions in the global supply chain and in also really receiving some of these Chinese investments. So we're going to see more Chinese investment in East Asia, in Arab, Middle East, North Africa, South Africa, South America, and so on and so forth. So I know that some of the typical investments, it's part of the BRI, for example, That includes, for example, the $3 billion heavy construction in the Egypt's capital by Chinese state-owned enterprises. So there's a lot of BRI countries that are partnering with China to carry out these investments. And I think that China has been investing heavily in energies, metals, transport sector, as well as real estate sector. But going forward, I think a lot of EVs and some other new green energies and green tech sectors, we're probably likely to see a lot more growth when it comes to overseas Chinese investments.
And so actually China's digital economy has also grown quickly in the past few years and now accounts for a quite a significant proportion of the country's total GDP. So how should we understand its significance for China's economy right now?
For China, it's at quite a unique position when it comes to digital transformation, because one driver right now for the consumer market is absolutely the e-commerce and the AI and machine learning powering this e-business. So it has generated a tremendous amount of jobs in city services. And if we look at the fundamentals of China, it has more than 800 million smartphone users, plus a universal digital identity system and a super cheap real-time payment mobile system. That has put China in a favorable position to adopt any type of AI in the future. And we often talk about the aging economy or the silver economy, and that will be centering around providing, say, the monitoring or the robotic-related services to the elderly, and that will create new demand as well.
Yeah, so actually Dan mentioned the development of artificial intelligence or AI. Actually, a recent report from the WIPO says China has filed the highest number of generative AI patents over the past 10 years, and that is 38,000 in total. So what does this tell us about the progress of this particular type of technology in China?
Right. So artificial intelligence is definitely, the very important growth spot in the future when it comes to technology, but also when it comes to the general technology integration into the traditional industries. So China is definitely taking a lead role in the global AI development. When you look at 2022, as you mentioned, some data, and another data point is 61% of the global AI patents originated from China in 2022. So I think definitely China is making great headways towards, AI development. And I think there are a couple of reasons for that. And one of them is that the commercial prospect of AI in China is very promising. In other words, there's a huge market for AI development and also application. As Dan mentioned, China has the largest internet user basis, and it's also one of the largest single, consumer market in the world. And China also has really comprehensive, large size, manufacturing sector that would really allow a lot of the AI integration and usage into, many different industries. And so that would really help to synergize innovations and also development. China also has really unique advantages in terms of AI talent pool. And so I think all of these are very important to develop AI, not to mention, the state support and also really innovative entrepreneurship. So all of this would provide really strong foundation for China to continue to develop AI.
So Jiahe, so China is home to some of the marquee technology companies in the world. So what do you think is the driving force behind these tech advances in China?
China is currently home to some of the marquee technology companies in the world, and there are many reasons behind this. Because I think the most basic reason is because China is a market that these tech companies that they can't miss. Because every technology is not for technology itself. The reason that companies develop a lot of technology is basically because they need to find a place where they can utilize such technology and find a large market. And when we look at the Chinese market, is that it's such a large market with 1.4 billion consumers. So you just can't miss this place. So that's the reason why they're coming to this market. And the second reason is that China is really welcoming all these technology companies. China welcomes all kinds of technologies, not only the technologies or tech companies that comes out of China, but we welcome every technology companies in the world. I mean, look at Apple. Apple is having a huge market in China. And if you look at companies like Microsoft, they also got a lot of money from the Chinese market every year. So coming to China is welcomed by the Chinese market. And finally, another reason is that if you operate in China, not only talking about getting money from its consumption market, but if you do your business operating in China, China is able to provide a large amount of labor force who is actually well educated enough to support any kind of technology innovation. So we got a huge foundation of university graduates, postgraduates, or doctors. It's a huge amount of labor force that are equipped enough for any technology companies.
So according to the IMF, China and India will account for nearly half of the global growth this year. So how do you describe India's economy?
Well, I do think that India's economy has huge potential. Going back to this idea of convergence, India is still a relatively underdeveloped economy or developing economy. Its per capita GDP is about $2,200. So it does have has a large room to grow. The IMF projects that India is going to grow at 7% in 2024. And I think India has done a couple of really important and good things in the recent years. For example, they have been investing heavily in infrastructure, just like China. They have been investing about $100 billion annually in the past few years. And they have also achieved progress in terms of digitization. So I think there are bright spots in the Indian economy. Their service economy is driving the growth. However, I think there are also some of the downsides when you look at the recent economies. For example, the private investment, it's plunged to about 19.6% of GDP ratio in 2021 to 2022 from the peak back in 2007, 2008. So when it comes to private sector, they're still struggling, partly due to some of the, I think, wrong-headed policies when it comes to taxes. We're also seeing unemployment problems in India's population, especially for the youth. Right now, the youth accounts for about 83% of the unemployed workforce, and especially for the educated youth, their unemployment rate has gone up. Their unemployment share has gone up from 54% to now 66% in 2022. So what that means is that even though India has this very young and educated workforce, a lot of this workforce is under and unemployed. And I think this is a huge waste of their talent. Now, I think youth unemployment is a worldwide problem. The worldwide average youth unemployment rate is 14.3% in 2023. But I think this situation is much worse in India. We're also seeing, for example, private consumption growth has been pretty soft at about 3% only. And inequality has been widening. So I think there are a lot of issues that India is also coping with, despite the fact that it is taking advantage of right now some of the global shift in terms of global supply chain and so on and so forth. But still, I think India still needs to solve some of their structural problems to really continue to boost their productivity and their jobs and also their growth prospect. One last thing I think is important to also see is that, even though there's a lot of talk about, India rises as a very important node in the global manufacturing, supply chain, the fact that the Indians manufacturing has been actually pretty flat in terms of its growth. It hasn't grown very much at all in the recent years. So I think, again, for India there's definitely growth potential, but I don't think that optimism should be overblown.
We just talked about Asia's economy, and now we will focus on the US, Europe, and other countries. What has led the IMF to downgrade its forecast for the US growth this year?
Right. So I think for the U.S. growth, part of the growth that the U.S. is experiencing despite a high interest rate has to do with the very stimulus fiscal policies. The U.S. deficit to GDP rate, fiscal deficit to GDP ratio is around 6%. And this is outside of a recession year, which is, very stimulus and expansionary and rather, I would say, unusual. And also, even though, the US does have a very high debt to GDP ratio, but because a lot of this debt is held by the public, and then thanks to the high interest rates, the federal government is essentially injecting $600 billion interest income every year to the economy. So this is a relatively, rather stimulus effect to the economy. That said, I do think that, keep the interest rate higher for longer could have some harmful spillover effects, not only within the United States in terms of a long-term, especially green investments, but also spill effects to other emerging economies when it comes to stronger dollar, higher interest rate on their loans, and so on and so forth. Now, even within the US, I think there's some concern about the progress on disinflation has slowed. Which means even though the energy and food price has gone down, but they don't go down as fast as they used to. And there's also the concern about service sector price and also wage inflation. So given all this concern, it is likely that the central banks are going to keep the rates higher for longer. And that, I think, could affect the US's consumer sentiment, and also in terms of long-term investments. And there's definitely some of the soft spots, I think, that remains risky. For example, commercial real estate, as the refinancing cost is getting higher because the rate hikes, this sector is going to under some stress. And that could be, I think, some of the tipping points for the economy. Also, of course, consumer loans, consumer credits, some of these high interest costs could put some dent in the household sector's balance sheets. As we know, the U.S. economy is very much driven by consumer demand. So if consumers are struggling with paying back these consumer credits, that could in some ways dampen the economy. So I think there's still, optimism when it comes to the U.S. economy's growth, but there's definitely downside risks that cannot be ignored.
So what about Europe? How do you see the inflation over there? And what do you think are the main challenges for the European economy right now?
The European inflation is more or less in check, and that's why the ECB has the confidence of entering this rate cutting cycle. But there are some long-term fundamental structural problems still there. When we look at different countries, they are subject to different shocks, of course, but they're under one rigid fiscal discipline. The EU countries are required by the EU treaty to keep their budget deficit within 3% of GDP and their public debt within 60% of GDP. Several countries already breached that limit. But in this economic downturn, actually a temporary breach or even protracted breach is necessary. But many of the countries are under pressure to go back to the fiscal discipline, and that means higher taxes and less fiscal spending, and it's not beneficial. The EU GDP growth also was the slowest since 2010. It essentially grew by 1% every year since 2019. That's only about 20% of how China was doing and about half of how the US was doing. Its immigration policy has also added more pressure to its domestic economy. But one bright side, though, is the startup scene. The French government and the British government are both so keen to attract more talents and investment in the high-tech sector. So we can actually see a quite vibrant VCPE scene in the whole Europe, just because some of the leading companies that headquartered in France, in UK. So I suspect that will become a sustained driving force in the years to come.
So the IMF expects the world economy to grow 3.2% this year. And this is still lower than the average global growth of 3.8% from the year 2000 to the year 2019. So why is the growth still soft?
Right. So I think there are a couple of factors. For the developed countries, again, even though inflation rate has, significantly declined since 2022, it still remains higher than what many of the central banks are consider as desirable interest rate as their target, which is 2%. And globally, inflation rate will slow to 5.9% this year, according to the IMF, down from 6.7% from last year. So this is still relatively high. So that means the central banks will still tend to hold their high rates for longer periods. And so that could be, in some ways, dampen their growth prospect. And second is, I think we still have a lot of, geopolitical risks that are around the world. We talked about, the potential, hikes in terms of inflation due to global shipping costs. There are also, geopolitical tensions when it comes to trade. The IMF sounded the alarm that, not only because of a higher interest rate and higher public debt, but also the so-called gradual dismantling of the multilateral trading system could also be a downside risk for the global economy. On the other hand, I think for the developing world, despite the fast growth prospect of the Asian economies, there are many developing countries are really trapped in debt. Their debt has been rising, and their interest payments and debt services have consumed a large amount of export revenues as well as the fiscal revenues. So many of these developing countries are in debt distress, also especially for low-income countries. So I think those are the reasons for these rather low growth prospects that IMF is putting out.
So Jiahe, so with the current tech innovation advancement, especially those in the field of AI, do you think they will improve the productivity and efficiency for the economy?
Definitely, we have seen, these kind of AI are actually something new in our economy. We didn't have them back about 5 years ago. We were imagining them, but we didn't have them in the application of economies. But nowadays, we're having them coming into the economy. And if you look at the history of the technological growth, how the technology really changed our economy, the lesson that you can learn from history is that every time we got a new technology and we got them coming into our economy, its impact will not be unleashed within 1 or 2 years. It will be a continuous progress, at least for 5 or 10 years, or even much longer when we talk about something as large as AI.
Well, we're speaking with Chen Jiahe, Chief Investment Officer at Novum Archi Technologies, Yan Liang, Professor of Economics, Willamette University, and also Wang Dan, Chief Economist of Hang Seng Bank, China. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.